I'd like to invite to join Jiří and myself. I'd like to invite Dominik Poiger, Chief Product Officer, Deutsche Digital Assets. Dominik holds a CFA charter and has a proven track record in bringing crypto asset ETPs to market. He previously worked for global top 10 ETF provider, where he was instrumental in creating their crypto ETP platform in Europe. He started his career in asset management as an emerging market high-yield bond trader and managed synthetic yield strategies. Dominik is a firm believer in the potential of crypto as an emerging asset class. Thank you so much for joining us, Dominik.
Thank you so much.
May I invite you to briefly add your views on Jiří's presentation, and I'm happy to take, if you take a digital asset element as an emphasis, please. Thank you.
Yeah, absolutely. So thanks for having me. And I mean, the digital asset or crypto space is probably so small that it wasn't even included in the breakdown.
It's there, but you can't see it.
It's there, but you can't see it exactly. But we see a growing interest in crypto assets and maybe overall in digital assets when you look at a longer trend where tokenization may be more relevant. Yeah, I mean, our background is bringing passive exposure to investors in crypto markets, but also active exposure through crypto hedge fund strategies. But they're a tiny portion of what was presented. So, but I mean, there are some large vehicles, at least publicly accessible across the globe. And when you look at the US, Grayscale Bitcoin Trust is a very large Bitcoin trust that holds 600,000 Bitcoin or something like that. And also in Europe, the crypto ETP space that was basically launched in 2020 when the first centrally cleared Bitcoin ETP was launched on Deutsche Börse, etc., which made it accessible for retail investors and institutional investors alike. And I mean, the market size is, compared to the US, really small, with around 8 billion, give or take. Maybe one day it's 6, another one it's 9. Yeah, we see an interest in the market for crypto assets first and foremost, and then on the longer term horizon, digital assets that may fit more into this framework that you've presented.
Thank you, Jiří. And thank you, Dominik, sorry. And Jiří, you mentioned briefly the hesitancy on the US regulatory side with crypto. And I followed the story over the last 2-3 weeks as well, and you mentioned Europe is ahead of the game, regulatory speaking wise. Where do you see this trend going? Is Dominik placed well in Germany, or are there?
Yeah, I look, unless the US changes its approach and finds a way of providing legal certainty for the main players, I see them losing the market. And it's not the first time, right? We see it with the euro-dollar market, right? When the euro bonds were issued effectively as a result of the US taxation policy and has grown to be extremely large. Similarly for derivatives, right? London didn't become the center for derivatives spontaneously because there's great weather in the UK, right? So there are a number of precedents where US policymaking, either by choice or by accident, results in a massive global market developing outside its borders. This could be another instance of that. And what is interesting with crypto is obviously all the projects that are out there in terms of what they're trying to achieve in terms of generally digital economy, but also in its application to finance, right? And in that aspect of changing the whole supply chain of financial services, right? So the fact that Europe has this pilot around using distributed ledger technology for clearing and settlement and trading I mean, it's immense. But it also means, again, like, what does that mean for the future of stock exchanges? What does it mean for a future of, I don't know, fund administrators, for example, because we are already seeing funds being launched in a tokenized form. So I think Europe has now the opportunity to charge ahead and to do something which is fairly interesting from a financial perspective. And possibly attract quite a lot of capital and know-how from the rest of the world, right? Other jurisdictions obviously are trying to do similar things. Singapore, Hong Kong, Dubai, they're growing from a crypto perspective, and I think it's just a sign of certain maturity, where in the United States, unfortunately, the political debate is making things unproductive, right? Everybody agrees things should be regulated, but everybody doesn't agree necessarily that the regulation shouldn't lead to effectively the destruction of certain business model in the digital asset space, right? So if you are to unlock the promise of digital assets, you're going to have to regulate them slightly differently than your traditional securities issuers or stock exchanges. And if you don't want to recognize it, and you say you must conform 100% to the particular model that we have for financial services, then those who will be able to be flexible will, I think, attract a lot of business. Now, DLT as a promise was here since 2008. And again, I like to compare it to nuclear fusion sometimes. It's always like 5 years to the final breakthrough where everything will be on blockchain, right? From, I don't know, your medical records, your identity, and the entire web will be run on blockchain and all that. Again,
you live in the metaverse.
Exactly. So, it remains to be seen. I'm not like a crypto evangelist, but at the same time, I believe that any technology deserves a chance, right?
Yeah, I think the genie is out of the bottle. There's no way for regulators to bring it back or to disinvent blockchain technology.
Yeah.
So yeah, I mean that's where we are, and I mean you're completely right. Like when you're looking at the phase from, let's say, beginning of 2017 to beginning of 2018, large hype cycle, everything on the blockchain, and I mean the market just needs time to mature, and not everything can be or should be on a blockchain. So yeah, that there needs to be some more time and to see which protocols even have a use case.
And today we've got the digital euro announcement, right?
Indeed, it was yesterday evening. Yeah, that brings me to my next question. I wanted to put to both of you. The digital euro is upon us, or sort of almost imminent. A date has not been set for the launch, and it's meant to sort of run parallel. Any views, any more insights from your perspective, Dominik?
I see CBDCs as very dangerous, just for the control aspect of it. But I guess there's no way to escape it. So, but I don't know how it should work. Do we all have an account at the central bank then, where our digital euro is then stored, or is it going to be issued by private banks? I don't know enough about that.
It boggles the mind, right? Because the point of DLT is the D, right? Distributed ledger. And so for the central bank, I mean, like the central bank could have introduced digital euro in 2001, right? By saying, okay, we're just going to have a database of all transactions and you can all open an account with the central bank. Actually, we had this kind of digital thing in the Czech Republic since 1993, because the way the privatization happened, right, was that everybody was given vouchers, and those were converted into shares of publicly traded companies. But what happened was that they allowed individuals to have accounts in the central securities depository. So there was a direct thing that was happening there, and that's exactly the same what you could have done with central bank and cash, right? You could just allow people to open accounts in a central bank, and that's your digital euro. Because the only difference between that and another euro is who is the creator of that account and holder of that account. Is it a private institution or is it a central bank? And you don't need any kind of DLT technology to run that. Zero. There's no point, right?
Yeah. And we have digital money already anyway. It's just I think the control aspect of it.
Exactly. I mean, I just don't see what the utility would be and why is it connected to blockchain, right? I don't like that's strange. Because there's only
at
one
least not the
party
decentralized
controlling
part.
this.
Yeah, exactly. Yeah, it's completely centralized and not decentralized. But I think it's also.
And I hope the central bank doesn't want to make it an open blockchain that shows what accounts people have to everybody to check, like with Bitcoin, right?
Yeah.
I mean, so it is a very peculiar endeavor, I think, and I'm still struggling to understand what the real intentions are, and what is the policy outcome that the people are trying to achieve.
Yeah.
Because it could be the central banks want to disintermediate the banks as well. I mean, they're sick and tired of regulating this, and they want to have a more efficient transmission mechanism. So this is like a Trojan horse, right, to allow for this full-on single central bank activity that's sort of anchored in those institutions. I mean, I don't know.
I mean, we briefly discussed outside the tinfoil hat, right? But I think it's also a game theoretic play where the PBOC is working on a CBDC, so you got to do it as well. The Fed potentially as well. Some other central banks globally working on it. So you got to spend the tax dollars, tax euros somehow.
Indeed. Any questions from the floor? Ladies and gentlemen, please raise your hand. Engage if you feel like it. Anyone? Any other topics you want to highlight with outlook to the future in general on alternatives? What else do you see on your AIMA radar? What do your members worry about?
IA is a big topic in terms of being able to understand, because when it's deployed to the markets, and it is already deployed today by managers, people have to understand it's very different from the traditional algorithmic trading, right, which was quite deterministic, where you basically set out a set of rules, and on the basis of the rules that the machine delivered, right? Where with the AI and sort of the deep learning technology, the rules that you set out are sort of meta rules, and the algorithm then learns to obtain a particular outcome. But what you don't see is a pathway necessarily, and the reasons why that algorithm may have achieved those outcomes. I mean, you can code some form of software that tries to detect why certain decisions are taken, but it's not necessarily identifiable at a certain individual point. Now, if you take regulation of both risk management in MiFID and also market abuse around algorithms, it presupposes that at every given point within the algorithm, there is an identifiable person that's responsible for the development of the code and any changes to the code. So that if something happens, like you have market manipulation, you can go back to the firm and say, so who is responsible for this piece of code? That person is manipulating the market, right? They've done this change, and since then, the algorithm started to do certain things like spoofing or, pump and dump schemes done algorithmically. You're not going to be able to do that with AI, right? And you won't and the AI could develop in such a way that it will become a smart and undetectable market abusing mechanism, which could undermine the confidence in public markets by individuals, right? So if I, as an investor, know that I will be always on the losing side, why should I, again, invest in public markets? Or if I'm a pension fund, right? I'll go to the private markets. That's easier, and I've got that certainty. So in a way, that could lead to some serious issues in terms of the regulators not being able to enforce what is a necessary component of market integrity. And even the managers not being able to understand what's going on with some of those strategies.
Please, could we have a microphone for the gentleman, please? Thank you. Thank you, Sandra.
And it's even more strange if you have algorithms or AI algorithm on both sides, where you don't know who's the buyer and the seller and who's smarter, which algorithm. That would be really interesting if we have a market anymore afterwards. So yeah, it's very philosophical, but could happen. And we already have seen what's happening if algorithms make mistakes, and we have some market crashes for seconds where the market is gone more or less.
I mean, today it's 90% of the market or more is probably machines trading against machines. There's little human involvement, right? So that's already the case. It's just that the machine behavior has been largely deterministic, right? I mean, there's some stochastic elements to it and all that, but in some of the, again, like once you go to the true sort of deep learning mechanisms, the goal is to develop something which you might not understand. And it's the same way that you don't understand a human being necessarily, right? Like when you go to a psychologist, the psychologist shouldn't always believe what you tell them, right? Like they should probe you and try to understand like why you say what you say, and have multiple sessions, because if you just write down like what's wrong, what you think is wrong with you, they might not give you the right diagnosis, right? So it's the same problem that we will encounter, or we've always encountered with human beings. It's just that now it's going to be kind of much more difficult in that sense, that like we've moved from a phase of purely human-driven trading to machine-driven trading to now like intelligent machine-driven trading, and that's going to be slightly different in how you regulate it and how you try to oversee the market.
Dominik, any views from your side, especially with AI and the question as well?
Yeah, I think you're spot on. Market is already machines trading against each other, but they are just much more efficient than in identifying market discrepancies. At least in the public market, you're completely right. So as a investor, you have to think about what you said. You rather invest in the private market or in the public market, where you're going to get arbitraged away. I mean, I think it's an interesting development, and the speed how it has developed since ChatGPT actually was released and started this public hype about the technology. What has been released since then is incredible, and that's only what we as outsiders can see. I would guess there's much more, the really more interesting stuff happening behind the scenes that we are just not able to witness yet.
Any other questions from the audience? Anyone? Any follow-up questions? Did it answer your question? So, yeah, good. Very well. Then I allow myself to bring this session to a close. Jiří, thank you so much for your excellent presentation. Dominik, thank you so much for joining the panel. Ladies and gentlemen, please put your hands together to thank our panelists.